Number One Upon Wall Street. So this book is a classic written by legendary investor Peter Lynch, who managed the Fidelity Magellan Fund, and he delivered 29% annual returns for continuous 13 years. So his biggest lesson: individual investors like you and me can beat Wall Street by investing in companies they understand. So, so what is he typically saying? So he says invest in what you know. So you have an advantage over professionals because you interact with products daily. You go to a supermarket, you go to different shops. So end users are part of your family, part of your colleague group. So you get upfront investment about stocks that are going to become multi-baggers in the future. So he says that whatever observations you have on a daily basis, let's say you have some banners about a specific company, so see if that company is listed, if there are lots of ads, if there is a product that is catching up at getting good reviews, then look at those companies and see if there is an opportunity. So this book explains how to identify winning stocks very early by investing in what you know. So he says, do your research, focus on a company's growth, financials, and business model. Just because of stock is trending doesn't mean it's a good investment. So if you've ever wondered how to find great stocks before anyone else, then this book is for you. So for me, this book is a Bible. Whenever I'm confused, whenever I have some questions about investing in stocks, whenever I have a lot of lack of clarity, then I go and read this book. So this book is one of the easiest and simplest books to read and understand. So let's say you're a beginner. Can you read this book? Yes, you can. If you are an experienced investor, you can still read this book. So this book is for everyone. So personally, I started with this book called The Intelligent Investor, which was way too complex and confusing. So had I started with this particular book, probably I would have skipped 5 years of learning and gone ahead with better returns in the first few years. So start with this book. This is your Bible for investing. So book number two, Rich Dad Poor Dad. So this book is not just about investing. So it's about developing the right mindset for wealth. So Robert Kiyosaki is the author who shares lessons from his Rich Dad and Poor Dad on how money works. So he has two different characters. A rich dad, how he behaves, how his thought process is, how he teaches his son. A poor dad who teaches his son. So key takeaways. So he emphasizes financial education, creative passive income. So he talks about assets and liabilities. So assets put money in your pocket while liabilities take money away from your pocket. So this book promotes the mindset of making money work for you. So you can build a passive income. So he asks you to focus on investments that generate cash flow. So you're not dependent on a salary. So schools don't teach money management. So you must learn it yourself. So financial education is key. So if you want to break free from the rat race and start investing, so this book is a game changer and a must read book for you. So let's go to book number three. So book number three is from India. So I've interacted a lot with Basant. So he's one of the best investors in the country, and he's actually kind enough to write a book about Indian markets and Indian investments. So if you are looking to invest in India, if you are already invested in India, then this is the best book for you. So 10 years back, there were no books available to know and learn about Indian markets. So he started it, and this is a must read for any Indian investor. So Basant Maheshwari is himself a successful investor. So he shares his thoughts about his successful picks, his multi-baggers. So he talks about growth stocks. So growth stocks create wealth. So instead of focusing on only undervalued stocks, so he says look for companies with consistent earnings growth. So hold your winners. So this is something as been doing successfully. If a stock is performing well, don't sell it too early. Let it compound. So he has companies like Pantaloon, Page Industries, and Eicher Motors to his credit. So he kept holding on to them for so that it could become 20x, 30x, 40x. He is not just happy with 50% or 100% return. So he's looking at 50, 60x returns. So he says identify multi-baggers that can grow 5x, 10x, or even 100x over time. So avoid bad businesses is something he's stressing on. So a cheap stock doesn't mean it's a good buy. So always focus on quality companies with strong leadership. So this book is a must-read guide for long-term wealth creation in India. So if you're serious about investing in Indian markets, then this book is a must-read. So go to book number 4. This is again another simple, easy to read book. The Little Book That Builds Wealth by Pat Dorsey. So this book teaches you how to find companies with a moat, a sustainable competitive advantage that protects them from competitors. So key takeaways from this book are, so this book Pat Dorsey talks about the concept of moat. So different types of moats like a strong brand, network effect, patent, cost advantage. All of these help companies to stay ahead. So it also talks about why moats matter. So companies with strong moats have higher profit margin, long-term stability, and can eventually become proper multi-baggers. So this book talks about moats, and it also talks about how to identify those companies. So how to look for companies that have pricing power, consistent cash flow, better brand power, better inherent advantages like network effect or government regulations, etc. So it also talks about not to chase high returns blindly. So focus on companies that have enduring business models. So if you want to learn how to pick strong companies that will survive and thrive, then this book is a must read. So it actually simplifies complex investing ideas for practical use. So let's go to book number 5. So book number 5, Value Investing and Behavioral Finance, written by the late Parag Parikh. So Parag Parikh Mutual Fund is my most favorite fund. And off late, when the markets were up and high at around 26,400, so many so-called influencers were questioning Parag Parikh's mutual fund, saying they are not fully invested, they are holding cash, they are not going to do well. All these questions were raised. But over the last 5 months, you have seen the kind of correction that the market has witnessed. So after that, now people are coming and saying that Parag Parikh is the best investor. So because of that, because after anticipating the correction, he has been holding cash. So his returns are far better than all other mutual funds. So all these are points that are coming up now. So, but he was criticized. The fund was criticized so much earlier. So I have been lucky to invest in this fund. So most of my mutual fund investments are in Parag Parikh Mutual Fund because I know that my money is absolutely safe. So safe, steady growth is what is possible with Parag Parikh Mutual Fund. I can probably spend another video on mutual funds of Parag Parikh. So let's talk about this book, Value Investing and Behavioral Finance. So this book is perfect for long-term Indian investors. So what it does, it combines value investing principles with insights into investor psychology. So what are the key takeaways from this book? So it says cycles are driven by emotions. So greed and fear make investors act irrationally. So it highlights how behavioral finance is very important, how emotions and biases impact investment decisions. For example, a lot of people stopped buying SIP during this correction. Some of them sold their mutual funds out of fear. So all these are emotional decisions that can impact your returns. So just because everyone is buying a stock, it doesn't mean it's a good investment. So he talks about avoiding herd mentality. He also talks about looking for businesses that are trading below their true intrinsic value. So the best investors hold stock for years and let compounding do the work. So patience is key, is what he's saying. So this book is all about behavioral financing, investing psychology, so how emotions and biases impact investment decisions. So if you want to become a successful investor, if you want to master both investing and psychology, this book will change how you think about markets. So this is another book, important book to consider reading. So if you have a goal of reading 50 books this year, consider adding all these 5 books into your portfolio for this week. So So, which book will you read first? So, tell that in the comment section. So, these books have helped millions of investors build wealth. If you're just starting out, I recommend reading Rich Dad Poor Dad for the mindset shift. If you want to improve your stock picking skills, go for One Up on Wall Street or The Thoughtful Investor. So, which of these books have you read, or do you have any other favorites? So, let me know in the comment section. So, if you found this video helpful, don't forget to like, subscribe, and share with your friends. So, stay tuned for more investing insights. See you in the next video. Thank you. Bye.